biggest tipping point for Indian manufacturing and Indian promoters and Indian entrepreneurs is the opening up of the US market, and therefore the tariffs being competitive from being one of the most punished nations when it comes to the US tariff, we have become the most favored one, and that's coming in as a very big news. From the manufacturing space, we have great representation in Maruti, exporting for several years, a large manufacturer leading from the front when it comes to our global roadmap. So Rahul, when we talk about the manufacturing thrust of India, this US trade deal, what does it mean for the manufacturers and also opening up the most lucrative market much more for us?
I think, as you rightly said, the US trade deal, one, of course, will put a lot of uncertainty to rest and a lot of apprehensions about very penal kind of tariffs on some of our sectors. Since I come from the auto sector, I particularly know that auto component sector was up against a wall. They had to face something like a 50% tariff, which is just impossible to penetrate. So across sectors, I think it will open up a big opportunity for exports. From whatever we are hearing, we don't think there are many areas of sensitivity where there are much concerns. And though the details are still coming, but if I take an example from the EU FTA, India EU FTA, I must compliment the government wherever we had sensitivities on the domestic front and wherever we had export interest, they have balanced it extremely well. All the areas of sensitivity have been taken care of really well. There has been a very calibrated approach in opening up relevant sections and being sure that when you go into granularity, some sub-segments have been taken care of, some sub-segments have been encouraged while participating in the global stage. So I think it's a big step forward for India. The other big advantage is at a time when geopolitical, kind of tensions, export restrictions are there, it opens up an avenue. So India is not now delinked from many large parts of the world. It's connected.
Yes.
That's a big de-risking that is happening.
All right. So very, very encouraging words and steps being taken by the government. Rajesh, when it comes to MSME sector, now enough support has been at least intended by the government in opening the market, as well as the budgetary allocation and the support when it comes to the funding and liquidity aspects of MSME. How do you see the growth that is really taking shape and the kind of quality of risk that is really building from the MSME side? Do they have the kind of support needed to take it to or catapult to another level now?
So if you look at, there are about 34 trillion rupees credit gap exists even today for the MSME sector. So while there is an enhanced focus on using the technology, data science, analytic tool and the better governance, where the regulator is also focusing, I think if everybody follow those and invest upfront in the technology side, the risk will be taken care of to the great extent. Now it comes out to the capacity building, that how NBFCs and other lenders can build the capacity to meet that credit demand gap and bring the efficiency level. I believe that opening of various other avenues, including bond market with the focus is coming, I think capacity building will take place, and the risk side, more investment in the technology side by the lender will give a immense support to the MSME sector in making those credit available which otherwise they are deprived of.
That's right, more usage of new age technology, and that is also seeping into the new age manufacturing as well. But Yashish, coming from the AI jitters standpoint, Anthropic has caused enough jitters in our market in the recent time. How do you see this AI ecosystem, and how well built is Indian capability to take that leap forward and be ahead in the game?
See, when you talk about AI, the way I see it, it's increasingly becoming a commodity, where and the price of that commodity is going lower and lower. Consumer brands will, in my opinion, like even with AI, somebody has to make money. Are they going to make subscription money, or are you going to get paid by somebody, right? So I think there is a very clear space for brands to adopt AI and utilize it for their customers in their, limited use cases. And I think that is what will eventually come out. What you will, in my opinion, see is, from a consumer's perspective, most people will use, now, instead of Google, it might be somebody else. But the point is, there will be somebody out there which is the go-to place. That's just the human psychology. We don't have space for 10 different almiras. We go to one almira for one thing. And out there, you will use AI as a technology, but it's such a commodity. Suppose you build a very good AI tool. Tomorrow, I'll build one better. Day after, he'll build an even better one. And the fourth day, he'll build an even better one.
But we have seen this kind of evolving technology in the past also,
But it'll just
till
bring
it
down the
comes
cost.
to a stabilized level.
Which is basically the cost coming down.
Yes.
The cost will keep coming down
Yes.
to a point where everybody can afford it. My view is today, if I want to use AI to talk to our customers,
Yes.
and one of the things people say is India has not taken on a lot of AI. There's a reason for that. Our cost of a human being today is about 7 rupees a minute. And good AI is 11 rupees a minute. So if you look at the European context, out there the cost is 50 rupees a minute. So the AI is working. When the cost comes to 2 rupees a minute, it will work here also. At 11 rupees a minute, why should I take AI when my employees is better than that? Besides the fact that it's painful to manage employees and it's easier to manage AI.
Yes.
Sorry, just talking in simple terms.
And also adopt the latest technology in AI, probably the way we did in the financial services, where we have the best capability right now in the world. I'm just putting across my point when it comes to the AI discussion.
I think AI is too easy, is all I'm trying to say.
All right.
It's not hard, it's easy, that's all.
All right, it's transformative. When it comes to the technological use in manufacturing, a large part of customers, investors are now telling me that the next wave of investment is going to be the technologically enabled manufacturing space. How is this leapfrog really taking place, Rahul?
I think that's a very, very valid observation that I agree with. So even when we, for example, design our cars, we have a term called software-defined vehicles. We think of the software first. So, and then we define the vehicle on those lines, and then we develop the car. So there's a lot of electronic controls that go into the car. Most of them are around themes of either powertrain control or infotainment, or cruise control, chassis control, for example. So we have a lot of technology, the new tech that is going into the car. And along with that, many opportunities are opening up in the software space to make the best out of that. Apps, for example. So Maruti Suzuki is engaging with many, many startups, because we know that these ideas come naturally to them in their kind of context. They are probably better suited for some kind of development. So we have a program where we are engaging with startups. I think we've 6,500 startups we've engaged with. Many of them we've onboarded. Many of them we've given free proofs of concept. And many of them are partners. I think almost 30, 40 of them are partners today to Maruti Suzuki. And we have the humility and the curiosity to learn from them. So you're absolutely right. The new age manufacturing is about tech and about knowledge. And it's not just in the products, it's in our factories also. Our newer factories are Industry 4.0, or even they have many features of Industry 5.0. So I'll give you a small example. The sequence in which we make models in our line, because we make models for hundreds of countries with variant specs, there are about 600 variants of them. The parts that are coming from the suppliers are coming in the same sequence as in which we are, and that supplier is situated cities away. So hundreds of kilometers away, the parts are coming in the same sequence as I'm feeding my assembly line. That is the level of technology that we have reached. So, and in other aspects like safety, for example, it can be leveraged big time.
Thank you so much, Rajesh, Rahul, Yashish, for really emphatically sharing your expertise and your insights on this discussion. So let me begin by asking Mr. J.S. Gujral, first of all, with CIRMA and with electronic manufacturers, what does the FTAs as well as the US trade deal mean in opening up the market and expanding the market potential and growth potential for the companies like yourself?
I think it's been a dream come true for the electronic sector. We have been in the industry for 40 years. And as Piyush ji said, we are stripped off all the demand by having the agreement with our competing countries. For the first time in the last 8-10 years, electronics has found a space at the head of the table.
Yes.
And I think it gives us an enormous opportunity to grow. Industry has to invest. Growth is not going to be easy. It's not like China, which had a 20 years of smooth run in a sort of a stadium with AstroTurf.
Right.
Current geopolitical environment is like you have to run a cross-country marathon.
Yes.
So the industry has to gear up. The government has done enough. Should it do more? Yes. Can it do more? A big question mark. They have their sort of limitations.
Yes.
I think industry has to invest in capability building.
Yes.
Capacity building is the easy thing.
Right.
Money is not a constraint today for credible industries. So you can get money from the market, from the debt, and you can create capacities. Capability is the challenge.
Okay.
And innovation. So we have to invest in R&D.
All right. So innovation is the nerve center. But for this CAPEX cycle to really pick up, two things are very important. That is the debt side and the equity side. The funding has to come from either of the two places. So Paula, you have been an investor. You're also very bullish on Indian manufacturing prowess. How do you see the MSME mid-manufacturers really taking the stride towards this opening of the market, and where is the money coming in from?
Like Mr. Gujral rightly said, the time for manufacturing is now.
Yes.
For various reasons. Of course, the government has made it, their priority. The whole China Plus model is right. We do need good capital. And by good capital, I mean a capital which understands the kind of timelines, the kind of investments, not just CAPEX, but also in terms of, innovation. To support innovation, we would need R&D. And I mean applied R&D. It doesn't have to be fundamental, but we do need capital that will support this kind of innovation. And technology adoption. I think there is huge possibility of jumping a few stages and getting on to manufacturing 5.0 even by the digital transformation. And capital can support this. And equity investors like venture capitalists who understand the role technology plays, I think they have to shift gears a bit.
Yes.
And apply it now to manufacturing industries, to things like electronics, defense, and various sectors where one can really add a huge amount of efficiencies by adopting IoT, process controls, data, and so on.
So Sachin, looking at the data and how MSME has really evolved in the last few years with the government support, has there been a momentum build up? What does the data show? And are the states doing enough to really build those clusters as well?
MSMEs funding or, let's say credit to MSME or finance access to MSME, as we heard the view of a, venture capitalist, but the key point here is that the insights of data or the level of transparency, what typically a credit provider or a investor requires. Unfortunately, in India, it is a cycle which has been evolving. If I give you some of the data points, see, we have about 7.5, 7.6 crore MSMEs. We have only 2.5 crore MSMEs which have been given at least one loan any point of time. As of today, MSME loan book is about 40 lakh crore, right? And if you see the penetration today, the live loans, it won't be more than 12 to 15%, right? So you can see that that's the credit side of it. If you come to the investment side of it, it will be even far lower. The growth of the country cannot happen without these 7.5 crore enterprises. And that is where data is going to play a significant role. They need to become more and more transparent, or they need to become more and more data centric.
Yeah.
And providers like us also bring certain value to that. But that's the ecosystem which needs to work, because that's where the credit and investment will
Yes.
play a significant role in making these sort of ecosystem players much
Right.
more robust for the future.
So more data and more risk analysis. These two, how critical is it, Paula?
Extremely critical, because without that, we are just speculating in the dark. We don't have a great amount of past history, so we do need current data, which is robust. And I think a lot of the digital transformation that has already happened through various initiatives of the government are already making MSMEs more sort of compatible with data. And that is helping us figure out, what kind of projections. So it's no longer simply Excel sheets. I think it is based on data, whether it's productivity, efficiency, supply chain resilience. All of that now is backed by data that helps us mitigate the risks or project the right kind of returns, the time frame, the various milestones. So extremely critical for MSMEs to really adopt this. And we talk of AI, but this is really great application for MSMEs to use AI ML to generate much more confidence for getting more equity into their company.
Now, Sachin, from your vantage point of view, how is the credit risk developing? Many banks shy away from this. Also, the cost of acquisition is high. But how is the risk propensity? Because till that comes down, not many lenders would be attracted.
Definitely, there is a bit of risk averseness in certain types of lenders. And also one point I want to make it here, credit is not just about credit. Credit is about at what cost you get the credit.
Yes.
In fact, if you get the credit at 10%, your competitiveness versus you take a credit at 18% is going to be significantly different, because it in some businesses, you just can't produce 8% extra profit
Yes.
to service that debt, right? So which means that the better you are in terms of your prudence, in terms of managing your financials, keeping your data, working with providers on submitting that to the right set of lenders, that's where the game changes.
Thank you so much, all of you, for sharing your insights.